Hello and welcome back to my channel, Sam the Rescuer. And today we're going to talk about terminologies. What exactly trading is and how the trading works. What the words, the heavy words like bull and bear. Many who is not in this industry or getting a background of trading or chart or technical analyzing, then they might be confused like what exactly is bull and bear candlesticks. The candles are different, but what candles are we talking about? What is the patterns, flag, diamond, cup and handle, like head and shoulders? Head and shoulder is supposed to be a shampoo, but what happened, like in how we are using it inside this? What is dead cat bounce? Why are somebody throwing a dead cat and it's bouncing? Yeah, so I understand I used to be, and many used to be the same page before we get into this. So now what we're going to do, like what I'm going to do, like I'm going to teach you guys, and this is not exactly for adults, this is for children's as well, because I'm focusing on the children's of schools, because in schools they will never teach you about monetary, the finance, how to handle the money management, what are trading. So but I feel schools, the children's are the best to learn because their subconscious mind is open and they can learn anything because they are in the pattern of learning, understanding. So if the children are going to learn from this age, from the age of 10 plus, depending upon the capability of a child and the interest of the child, if you teach the children about the monetary system and how the charts and the market works, I'm sure they're going to do wonders once they start in the higher secondary or the college, the graduate, they'll be like pro in this. So let's not waste our time. Let's get into it. Let's start because it's a lot of questions and I don't want to make this video very long. And for the guys who wants to stay connected at the end, I'm going to give you like what happens if the colors of the candles are same, and also the proper way of checking the impulse and correction. What exactly will look when we check for impulse and correction or the confirmation. So let's hang on with the video and stay together, and let's start with it. If you find this valuable, then you know what to do. Okay, so well, first question, what is instrument? Instrument is like say about this is BTC. BTC is a short form of Bitcoin. So that means it's called ticker. I don't know why they make it ticker, but it's a short form of a short form is ticker. Short form has two words. Ticker is single word. Okay. So if you say about, let me open this, and if you say XAU, XAU is a ticker of gold. And you see this? When I put XAU, gold will come up, and if you put XAG, silver will come up. So this is a ticker, and Bitcoin, Ethereum, be it gold, silver, or Euro, USD, anything you're trading is called instrument. So now you understood what is instrument and what is ticker. Let's come to candles. These are candles. Candles could be of many different types, but what basically majority of us trade on is this candle. This is TradingView, by the way, guys. TradingView, we will talk about TradingView as well. But as of now, we'll talk about the candles. In candles, you have a different ways, different options to select. And candles is nothing but it's data of collection of buy and sell. How would you know like how many people bought, like how much it was bought by looking in the volume? But candle will show you that okay, over here this is a daily candle. That means one candle took around, and not around but exactly 24 hours, not around. So this is like exactly 24 hours candle, 1 day candle, daily candle. We call it in short daily candle. So you call this time frame. This is time frame. So this time frame is 1 day candle. Okay. So if we choose say about 4 hour, 4 hour candle. So that means one candle is 4 hours. You get it? And once you go in the higher time frame, that is monthly, weekly, or daily, or sometimes yearly as well, so that is higher time frame. In short, we call it HFT as well. These are lower time frame, 5 minutes, 1 minute, 15 minutes. These are lower time frame, LFT. But this also depends on say about depending upon the trader type. like if somebody has bought Bitcoin 10 years back and they haven't traded Bitcoin, that is investment. They took it and they kept it. It was a trading. They traded by any of the fiat currency. Fiat currency means dollars or euro or any other ruble or any other uh, currency which we trade. That's fiat currency. And this is cryptocurrency. Bitcoin is cryptocurrency. So somebody have traded their fiat currency, bought this Bitcoin. So trading was done, but he hasn't sold. He kept it for years. That is investment. That's one type of a trader. Then comes swing trading, like somebody who was trading for few weeks, like they bought Bitcoin and they sold it after 2 3 weeks. It's a swing trading. There is intraday as well. Intraday is somebody is buying and selling in the same day. In same day they bought and they sold it. Max to max, it will go to the second day. And there is something called scalp as well. In scalp, you go lower to lower 1 minute to 1 minute time frames. Time frames, there are a lot of time frames over here. So you can choose any of the time frames. Even 1 minute candles are there. In 1 minute, how people are selling and buying it. So that's for scalping. We don't usually, we do this only for scalp. That means you get in and get out. You don't waste your time. You don't like, if you know that the market, this candle is going to go up, you bought it over here, you have your stop loss here, and you just, once it goes up, you took it and you're out of it. So that comes for candles and different stuffs. And now bull and bear. What exactly is bull and what exactly is bear? This is 1 minute chart. Just forget about it. Okay, let's go to daily chart as well. In 1 minute as well, the same rule applies. The bull and bear is never changes. Bull, as we all know, these both are animals. So we need to understand the personality type of this animal. What does the bull does? Bull got horns, 2 horns, yeah. Sometimes one as well, sometimes none as well. But the concept over here is the horn. When the bull hits somebody with the horns, they make the person or anything, it flies, it goes up, it hits and it pushes it up. The bears, on the other hand, is opposite. It has the claws with the nails, and when it holds something, the victims or the prey or the trees, anything, it just pulls it down. So tears it down, in fact. So bull is going up, bear is going down. So if you see in the chart, say about from here, it went till here or here, same. So this is bullish. You call it bull, you call it bullish. And if somebody is buying over here, that means he is going long. Long is going up. And if somebody is buying over here, that means the person feels or thinks that the market is going to go down. That is going short. This is going long. This is going short. This is bullish. This is bearish. Simple? Yeah. So what is buy, sell? So if somebody is buying over here, that means the person feels or the person understands that the market is going to go up. That's why it's buying. And if somebody is buying over here, sorry guys, and if somebody is buying over here and feels the market is going to go up, like say about over here, somebody bought, and buying means going long, that means going up, but the market didn't went up, the market went down. So that way the trade will not be successful. So not if, but rather the person needs to have a stop loss over here. So if the market goes on the opposite direction, it will hit the stop loss and the person will save their account, their money, right? Because we are dealing with the real money over here. So there is no fun business over here. There is nothing like, okay, give me one more life. This is not a game. This is the real money involved. So I'm going to teach you how to start small, even if it's a $10, it doesn't matter. At least starts and learn how to play the game. This is just as the other games are. It's not something difficult. It's just you need a lot of practice. You need to understand how this game is supposed to be played. Okay. buy and sell done, and long and short is done as well. What is trend? Trends are your friend. So what does the trend means? For an example, say about this is going up, down and up. See, you see this? It went up, it went down a little bit. It's called correction. I'll tell you what in just a few minutes. So this went again sideways. This is consolidate. When the market is going on the side, it's called consolidating. And this went again up, this went down, this went up. So basically you have a lot of swing points. You can call it swings, you can call it pivots, and when you see this in one go, you will see there is a trend. The trend is uptrend because it's going up. So this is an uptrend, a bull trend. And the bear trend is exactly the opposite, the bear trend. I'm sure you guessed it, right? The bear trend is this. It went back up again. It came down again. This is consolidating, by the way. I'll teach you what's consolidating and how to understand the market where it is going. So this at the end, it goes here and it went like this. So once you start from here, which is your starting point, you'll see from top to here, this is in the down moment. Even if it went a lot of times ups and down, if you have took the trade over here, your stop was supposed to be somewhere here. So it went up and down a lot of times, but then at the end, it's a bearish. So this is still bearish. So you understand the trend. Now let's look at the patterns. Let me clear this up, guys. So this is called object tree. This is TradingView. I'll teach you how this TradingView is used in the most efficient way, the most easiest and efficient way. I'll make a video on top of it as well. So this is the easiest way to remove all the arrows. You can see on the other side over here, the arrows are going to get vanished. Okay, let's talk about patterns. There are lots of patterns, and I don't think you need to learn all of the patterns. Only few of the pattern, maybe around like 10-12 patterns are there, which is very important patterns, and the rest, good to know. You know it, you need to understand the concept. So there are cup and handle, there are double top. This is double top pattern. So you can see the market is over here, it came back over here. People call it double top, I call it M because it will form an M. You can see this. And in my last video about when I talked about Bitcoin and how the Bitcoin is performing, the M got completed. There's a bigger M over here. So let's not confuse you guys because you guys are beginners. So I'm not going to talk anything about the trading or anything which is far more advanced and terminologies and all. So we'll talk about this slowly, gradually. I'm going to teach you guys how to understand the market as well. Okay, so patterns could be anywhere because this is double top. You can see one top is here. The second top again came over here. The market went and came back. So this is why it's called double top. When double top happens, market goes down. That's what happened. Market went down. And when the opposite is double bottom, when the double bottom happens, the market goes up. I don't have it over here. There is a flag pattern as well. There's a cup and handle as well. Cup and handle. Let me see if I can find any of the patterns over here. Yeah, you see the flag pattern, but these are subjective, guys. So you need to be careful when you're trading. You need to be careful that these are subjective. These can and cannot be. You see this? This is a flag. See this? When the flag completes, the market goes up. There is a reversal flag as well when this will be down and this will be going down and like this, and then the market goes up when there is a reversal flag. So patterns, we will make a video about pattern on all the important patterns, but as of now, patterns is actually when things what the pattern meaning itself is when things have happened previously and it's repeating the pattern. So the same pattern comes, same pattern repeats. And what exactly happens in the market, it has been seen before. So that's why it's called pattern. But is it guaranteed? No, it's not guaranteed. It can be manipulated patterns. Somebody just made it up. Who made it up? That's a different question. Let's not get into it. Types of traders, we discussed it. Investment, swing. Okay, and exchanges. What are exchanges? Exchanges are like in crypto there are different exchanges, and in traditional you have exchanges like IC Market, FX Pro, and different. And crypto you have Binance, Qcoin, Coinbase, Robinhood, Bybit, and Gate.io. So the traditional, that is IC markets, they have the crypto, but very specific. The you know the crypto which are already boomed, and not the mid cap or the low cap, only the high caps are there. So but in the traditional, in the crypto market, in the crypto exchanges like Binance or Qcoin, you'll find maximum majority of the coins available there. So if you're only into crypto, I would suggest to get in the exchange where all the cryptos are available. TradingView, I'll make a video on TradingView. If you guys interested, do leave a comment if you guys want me to make any of the video on any of the subject. And TradingView definitely is, this is if I'm going to explain TradingView, then that's going to be around or approximately an hour video, because a lot of details are there to be covered. It's not like one thing. And the one of the best I would say for trading is TradingView. Okay, let's move on to the next question, that is futures and spot. So futures and spot, usually when you're buying something in the exchanges without borrowing any money from the exchange, that is spot. And when you're buying something, borrowing the leverage, and they give you the leverage like depending upon like 10x to 500,000x, some 1000x as well. That's insane. But yeah, once you leverage it, once you borrow, kind of in simple words, I would say borrowing the money from the exchange, that is futures. And then yeah, spot is easy. Spot is you borrowed nothing, like you went to the jewelry shop or any other shop and you put the money down and you bought the gold or silver. That's spot, like buying the physical gold. In crypto we call spot and futures a lot, because you can either buy the tokens or the coins like bitcoins, or the tokens of the other projects. Like spot, that means you paid $100 and you got the value of $100. But in futures, you paid $100, for an example, hypothetical, you paid $100 and you bought the tokens for $1,000, and then whatever your profit or loss is, you then settle it at the end when you close the trade. Trade can automatically be closed itself as well once you start losing the trade, like once the trade goes on the other direction, on the opposite direction where you wanted it to go. Yeah, so this is my trading view. This is trading view, and I got my account. This is a membership account, and you guys can get it a free account as well. So this is here. So I'm the rescuer since 6 years, and actually I've been member since November 25th, 2018. Yeah, I took the premium. I was like crazy, and I didn't actually use that much. But yeah, before getting into the membership, the premium membership, I used TradingView approximately 1.5 to 2 years. So that was quite a long, and the free account was working fabulous as well. Like because I was a beginner, I don't wanted to commit anything without even understanding I actually needed. So yeah, premium was too high, and as actually you're not going to use all the features in premium when you go to start. I would say the basic would be good, and the free would be much better. I just turned to essential last year because it works still the same and better. In trading, you're going to get like if you guys want to enroll in the membership, then I would recommend to wait for either for Black Friday. The Black Friday you get like fabulous deals and discounts. Is like great huge discounts are there in on Black Fridays, and also for Eid as well. And Black Friday is like considered for, it stays until Christmas. So yeah, that's I guess so. So most of the time you would see in my thing as well, it's all around November when Black Friday happens. See, most of them, like 99%. So yeah, TradingView is fabulous, and I haven't come across like any of the projects which I haven't found in TradingView. Even if crypto, some of the projects they just launched, and you will find most of them in TradingView or related to TradingView. But you won't get disappointed. Like it's universal thing now. So yeah, TradingView, just get a free account and start analyzing. Even though you don't understand, just start looking at it. And I'll be making a TradingView video explaining everything, like all the features, how you can best essentially use all the features what are actually required for you. Not everything is required, but then there are so many things which is going to be useful. How to use it, what exactly it is. So yeah, if you guys want me to make that video, just leave a comment, and that video is going to be long, guys. That's going to take a lot of hard work and a lot of stuff. So that's going to be approximately an hour video explaining all the features. So yeah, that would be for all to trading. You just get a free account, enroll, sign up, and that's it, good to go. Talk about indicators in TradingView. There are many indicators like Fibonacci, Elliott wave, and yep, GAN. So indicators you'll find over here. These are pre-ready. Mostly I use these are pre-ready ones, and mostly I use the Fibonacci. So Fibonacci is what I normally and maximum I use it because I'm a number guy. And yeah, Elliott wave is good. I'm very curious, and I'm like learning Elliott wave and GAN as well. GAN is a long study. That's just something different subject. So anyways, yeah, indicators are there. We're going to, like, when I make the video on TradingView, definitely I'm going to cover the indicators as well. So you guys understand how to use the indicators and which indicators are useful, because everybody would be synchronizing with different strategy, different indicators, different way of analyzing. What I'm going to do, I'm going to give it to you all and let you guys decide which one you feel comfortable and you feel like it's useful for you, right? So yeah, there are more indicators over here as well. You see that it was written indicators, and some of them I have selected as my favorite. I use it here and there. Like most of them, these are the ones like the Bollinger Bands, the Gap Finder, the Moving Average, RSI, yep, MACD as well. So yep, these are the ones which I use it. If you can't find it over here, you can always write down anything over here, like say about which one. Uh, gone. So you'll find that a lot of people, they put their scripts as well. They make the indicator and they put it, and some of them are locked. Most of them are open, so you can use it. But make sure if you're using it, you know what you're doing, and if you are actually trusting the other person analyzing, make sure you first try it without money involved, right? Okay, let's get to the last question. That would be, I'm sure you guys must have heard bull trap and bear trap. What is bull trap? The word itself explains everything. Bull trap, bear trap. So you're trapping the bull and you're trapping the bear. So how exactly it happens? This happens like when, say about this one. This one, I made the Bitcoin video when the market was here, this candle. So that's around a week back. Um, 1, 2, 3, 4, 5, 6, 7. Yeah, that's around a week back. So if you guys are thinking, what did I count? Did I counted these candles? 1, 2, 3, 4, 5, 6, 7. So one candle is one day. This is a daily candle. So that means it was 7 days before I made the Bitcoin video. The candle was here, and this candle went down, and I told you guys in that video that this mid will be tested. It has to close below this. It just got violated, but didn't close below. So okay, some of you will say that this candle closed below, but there is no confirmation, no confirmation of going down. So what did the market did? The market went down, okay, and all the bears, that means everyone who was bearish, thinking that the market will go down, they started shorting the market. And then the bulls come, they push it all the way up, then again the bear takes down, then again the bull pushes. So this is what we call, okay, this is what we call, come on guys, answer it to yourself. This is, we trapped the bears because the bears were trying to go down. The bull trapped them and boom, the stop loss got hit. Now the same thing happening again. The bull started going up, the bear started pushing down. And see where they're testing. They're testing the same midpoint. You see this? None of them is closing beyond this midpoint. If they close beyond this, they have to give a confirmation that they are ready to go down. So as of now, it's testing this one. Let me remove this line from my cursor. It will be easier for you guys to see. See, this is testing the same midpoint of this one. This is the M. I'll show you the bigger M. So first, let me explain the bull trap. The bull tried to went up, the bear pushed it down. Then again, the bull tried to go up, the bear pushed it down. So the bear took it down, down, down. So what happens? They trapped the bull and the stop loss got hit. So what I feel as of now, we are going to see bear. Right? Because there is an impact, and until we don't close beyond this, like below this, it has to close first thing. Second, it has to give a confirmation of yes, I'm ready to go down and the market is bearish. Now if you want to see the M, you see the M from here, right? And now it's testing the midpoint. Once the midpoint is violated, it will go down. Where down? There is some numbers as well. We calculated by looking at the Fibonacci. So that was it, guys, for today, and we'll meet you. No, I'm joking. I know there are two things left, which I promised in the beginning of my video. That would be for the candles. Why the candles are green and black? Rather, it's supposed to be green or red or black and white. Why black and white? Because most of you guys are new who won't know that before the digital world, our candle used to be black and white. So black was bearish and white was bullish. So yep, and that's the reason we have a lot of candles. It's just called three black crows or three white soldiers, something like this. So which is racist, man. I don't I don't like this. The black crows and the white soldiers. Yeah, why not black soldiers as well? So anyways, not getting into that. So yes, this is black because I don't wanted it to be red. That's for that's for sure. And why not red? Because red is a psychology color. Because we grew up in schools and everywhere, and the red taught us, like the world conditioned us, that red is scary. Red is danger. You see red on the streets, street lights, the traffic lights, you stop because you know that's a danger. You're not supposed to cross when it's red. So red is everywhere, and we are conditioned to see red and to get scared. So that's why you're not supposed to have red. You can choose any color you like, but if the red is hampering your psychology, and trading is everything about psychology, trust me, you don't want to uh, get involved into this by getting your wrong psychology involved. Your emotions gets involved once you want to long it and the market is going down. You see a lot of red and then starts panicking, and you close your good trade as well. It happened. Yes, it happened with me. I closed a few of my few times my good trades, and it was a long time back, and I understood this was because of the red I see all the time. When I'm checking my phone for like trades and I see red, and you panic, and then you close it. They're good trades. Yes, the market goes ups and downs, and you have your stop loss there. You don't have to worry. Even if it's hit the stop loss, it's done. You save your account, because if your stop loss is not there, and I have seen a lot of, and even to be honest, I did this mistake as well. I blew up my account like few times, few multiple times, but then you learn from your mistake. Always put your stop loss. That's the way you protect your money. Even if it's like few dollars, it doesn't matter. You protect your account. Protect your account. Today you have that money, you can grow it tomorrow, compound it. Okay, guys, so that was it. And impulse and correction. What is impulse and what is correction? Okay, let me show it to you in a very sweet and short way, because this is getting longer than I expected. This is, say about this is one leg, right? Okay, let me zoom in a little more. Okay, my laptop has gone old. Needs to get retired now. All right, so this is one leg. Say about we started from here till here. And once you have this leg, anything which is coming under it until till here is where? Till here is the place where it opened first, like this one, this line. So until this market comes back to here, this is still a correction. If this candle comes till here where it started, the previous point of the market, then this is correction, 100% correction. Why? Because the Fibonacci, once you start the Fibonacci from one point, your starting point to your end point, then you check this is 100%, the place where it started. And if the market, say about, sorry, if this arrow haven't, this just came over here till here, this is 382, that is 38.2%. So this is impulse, this is correction. Now say, for an example, if we shift it, say about from here till here, this is impulse and this is correction, right? This correction is on this leg. We are not calculating this leg. It's always the recent leg. This leg from top till here, and now this one corrected because it didn't crossed this one. It didn't close beyond this one. So this is correction. And if we see this one, this is correction as well. See this one? It's under this. Now if you see this, what do you guys suggest? Any guesses? Any guesses for this? Mark the video time and put it in the comment. What do you say before you get the answer? This is impulse because it started from here till here and it crossed this. Let me see if it's closed, because make sure it's closed. It's just not violating. It's low. No, that didn't become impulse. Because closing is important. Like until it doesn't close, don't even bother. Close a wick is important for calculating the Fibonacci, but otherwise we are always looking for closed. Say about this one definitely became an impulse to this, right? This is the bigger one. Impulse is not only if it's going up or the market is going in the bull. Impulse can be below as well, the bearish as well, because you see this leg from here till here, this is bigger than the previous leg. So that means this is impulse. Even if it's not there, many of you will say, no, it's not